Welcome back to Golden Rule Radio. Miles and I are in the studio. Miles, what do you have for us today?
Well, we're coming hot off the heels of another Fed announcement this week, Rob. Looks like, despite expectation, more the same, right? They're not raising interest rates again, but it doesn't look like they're cutting them either coming into February here. So the equities market has certainly responded. Obviously, buy the rumor, sell the news. The rumor was they may start lowering interest rates this year. They did at least mention they might look at holding interest rates, if not possibly lowering them a little bit throughout 2024, maybe just to test the waters, and the market responded pretty aggressively to the upside. And now on today's announcement, we're seeing a bit of a turnaround, I think I'd call it.
And the bond market is higher. Yields have fallen on bonds and short-term treasuries. So people were moving from stocks to bonds today.
Yep. Although the 5-year yield definitely took a dive, 3.9 down to about 3.8. And we're seeing that kind of across the board here in the bonds. So yeah, you're definitely seeing people looking at that longer term money. Assuming you didn't know that today was a Fed announcement, I think anybody who spends some time looking at charts can probably assume that you're looking at topping action kind of across the board in the major market indicators, the Dow, the S&P, the NASDAQ. The Dow, I would argue, probably do somewhere between a 2,000 to 4,000 point decline, which sounds like a lot. It's not anymore, because the Dow isn't 8 or 10 or 12,000 like it was 10 years ago. But I think the Dow is looking at a pretty significant decline, same with the S&P and the NASDAQ. And we're starting to see that in a couple of the individual bigger stocks as well, some of the ones that we talked about last week. So yeah, I would expect a bit of a blow off here through February. I wouldn't be surprised to see it. And I'm curious how that's going to affect gold, being that gold really isn't at a topping position right now. In fact, gold has been trailing back down for the last couple weeks and showing some consolidation. So what do you think, Rob? You think gold's on the way back up quite yet?
You know, it's so hard to say. I've had people asking me the same question, and looking at it technically, we certainly can see gold break below 2,000, maybe even back to the 200-day moving average, which I'm guessing is somewhere between 1965 and 1970. Is that correct, Miles?
Yeah, you're right. The 200-day, at least as of today, is about 1964 and starting to flatten out a little bit.
Okay.
Compared to, obviously the run-up October, November, December, when we were putting in those highs. Now we're starting to inch back down a little bit, and it looks like the 200-day moving average is starting to plane out. Gold specifically itself, where the fibs are aligned, still sitting above that 382 fib. So we still haven't had much of a retracement back down. And you asked me a second ago before we started recording what I thought, and I'm short-term reversal bearish until proven otherwise. I still think we're going to see gold inch back down a little bit, or at least that's my expectation, and I'm definitely trying to keep some powder dry right now.
Well, and I'm looking at the world situation, and this is what I've been telling my clients. I had a client with money parked ready to buy, and I said, well, I think technically we could back up a little bit, but unless the U.S. and Iran get into it, then the technicals would fall versus the fundamentals. And Joe Biden said today he has a plan for dealing with Iran. He has not revealed what that plan is. But I am thinking probably going to stabilize above the 382. We touched 2050 today. We're back down to around 2040, 2038. I think the jury's still out, Miles. I know technicals are still slightly bearish, not very bearish. I mean, you're talking maybe 2 to 3% from where we are right now. But on the other hand, we're looking at a very unstable world, and I think that will overshadow the technicals. That's just my opinion.
Well, and that does happen. Even as somebody who tends to prefer letting the market speak for itself, sometimes the market speaks for itself in a haphazard way, let's politely say. You're a sayings guy, Rob. What's that saying? You've got to stay solvent longer than the market stays insane, something like that?
Yeah. No, the market can be irrational longer than you can stay solvent.
Yeah, there it is. Thank you. Yeah, I've always loved that because there's some accuracy to it. You know, I've been talking to a number of clients this week, and it's funny. I've had a theme with a few conversations that I guess might be worth sharing because I'm looking at something like gold-silver ratio. You know, the gold-silver ratio has been screaming buy silver. Well, but it's been screaming buy silver for like 7 years.
Yep.
Platinum and palladium. Now, there's one that's starting to show some promise, but it took 10 years almost.
Yeah.
And I'm looking at this and I'm saying, you know, from a mathematical standpoint, I know that things revert to means. I know that they do. Doesn't matter what we're talking about. Everything inevitably reverts back to its mean. What we don't know is the duration of that insanity.
Well, in one day a trend does not make, but you've got gold and the dollar both higher. Bond values have gone higher. And that's unusual for gold to be in the same company as a stronger dollar and stronger bonds as yields fell today.
Unless we're circling the wagons.
Yeah, I think maybe we are. I tend to be concerned if you have a 6,000 point or 10,000 point drop in the Dow, that generally affects the price of gold negatively. But if we're circling the wagons, gold is going to continue to stay strong above its 382 fib at 2020.
Sure. Well, and it doesn't necessarily have to. It doesn't have to affect gold negatively. I mean, one of the big reasons why we saw gold fall with the equities market back in '08 is just the unwinding of leveraged positions in the derivatives market.
Right.
It's fire sale. It's burning the furniture to heat the house. See, I've got a few sayings myself. I probably learned them from working with you for 20 years. So you're burning the furniture to heat the house. Well, when margin calls happen, everything gets sold.
Right.
So you've got no control over it. Well, we're not in the same type of derivative market situation today as we were in 2008. I will say that that's not where I think the crisis would lie. I think we're not looking at a derivative stock market crash. If we see the type of crash that some people are concerned about, I think we're looking at a U.S. currency solvency problem. I think we're looking at the ability to make good on national debt or the inability to do so by any means other than inflation, I think is a problem. I think it's a bigger problem. And in something like that, the U.S. government doesn't have any gold to fire sale.
No.
So I don't think it's unreasonable to say, could you see a decline in the equities market and gold doesn't do what's logical, and that's the paper market gold price declines? Tori would be rolling over right now if he were here because I'm being optimistic about gold. Like, I get it. But I don't think we're in the same kind of economic, political environment that we were 12, 15 years ago. I think it's a bigger problem.
We're not. And we entered into this year and came into the end of last year with a great deal of inventory. I mean, millions upon millions of dollars worth of product. And it is sold. We still have some, but the buying has really overwhelmed the market, at least from our corner of the market. We are very busy on filling clients' orders.
Yeah, and it just shows you how small the gold market as a whole is.
Yes, the physical gold market, very small.
Yeah, the physical gold market, absolutely, because you can't leverage metal.
Nope.
You can leverage paper, and you can leverage the digital ownership of that paper, but you can't leverage an actual block of metal. You own it or you don't. I mean, unless the ETF is involved, but maybe that's a longer conversation. You either have it in your basement or you don't. How about that?
Right.
So, yeah, and I agree. I mean, we're seeing obviously increased interest in metals, but it's not 2010, 2011 interest.
Not yet.
Not yet, because we're not seeing 2010, 2011 price moves. Although the type of move that we saw when we put in that most recent all-time high, you know, that October, November move up. I mean, when you're talking, what was that, 18% in 3 months?
Yeah.
Or even NVIDIA, you know, we were talking about NVIDIA, like the types of moves you're seeing in some of the equities markets as well. People are starting to chase things. I don't think the general public is. That's why I don't think you're starting to see the panic sale. Like you mentioned a second ago, you see a $6,000 or $8,000 or $10,000 decline in the Dow. That's when the average person gets involved. Like the average person doesn't catch the first 10,000 point drop. Like they take that loss. The big drop is the second one. And we saw this in 2008 when the Dow went from 14 to 6. It didn't go 14 to 6. It went from 14 to 10 and then 10 to 6. And it's the involvement of the general public reacting emotionally that ends up causing these big markets to move. So I don't know. I have no idea what we're talking about today, Rob. I just think it's fascinating when you look at something and you hear what's going on politically, economically, and certainly at the Fed, and you see what's taking place in the charts. And I have this gut feeling that we're going to be having a very different conversation even a week from now.
Very possibly. Yeah, this year is going to be radically different. This is not going to be a steady Eddie year. I think we're going to see increased volatility. I think you'll see the price of gold up at least 10, maybe 13%, possibly 15% of the year. And silver is poised for possibly a 20 to 30% move. We have a 30% move from here. We still haven't broken $30. I mean, silver right now is around $22.80. 30% move still puts us just right at or just below $30. And that doesn't really seem to move the meter, but that's a major gain. And silver is ready for it after all this time.
Silver's current trading range is 20% plus.
Mm-hmm.
So 30% is nothing. Silver could move 20% up from here and then come back down 20%.
People wouldn't even notice.
No, you wouldn't even notice.
Yeah. I've become very bullish on silver. I'm a gold bug, but I am very optimistic for the first time in a long time regarding silver.
Well, and that was actually my point, and then we got diverted when I said a minute ago, I've been having a repeating conversation with clients here over the last week or two, which I always find it interesting when there's something in the water. You seem to have the same conversation over and over again, and it's the gold-silver conversation. And I'm glad you just said what you said, because I'm the same way. I'm still a gold bug. I don't care what the ratio is. I'm always going to favor gold. But I got a lot more silver right now than 0%. I've still got way more gold than silver, but I am a pretty big fan of silver right now because, say it one more time for me. Give me the quip again.
The market can stay irrational longer than you can stay solvent?
All right, thank you. Yes. So, the gold-silver ratio market has obviously remained irrational for a long period of time. And
it has.
By the grace of God, I've managed to stay solvent, even pick up a few ounces over that period of time. But I certainly would prefer that we would get some good ratio swings from time to time, preferably more often than they have been. But we know it's going to go back to that.
Yeah.
So you keep chipping away at that stuff, and I just don't know if it's $3,000 gold that gets people's attention, but I do think $50 silver will.
Definitely.
And I think that's going to be a fun day when we see that. Yeah, we'll just have to see how the next couple of weeks play out. I'm really intrigued to see if gold follows the equities markets or not. How connected are they at this stage?
Good question, and I think we all are wondering the same thing. I am voting that it won't. I am voting that gold is going to stay strong. We'll see.
I really want to join you in that, except that would make me an optimist. I just don't like being optimistic.
Well, on that note, that's all I have for this week.
I think I'm good too. It's a turning point week. It's another whole lot of nothing out of the Fed and a kind of expected reaction out of the markets given what they've been doing over the last couple of weeks. So I think next week's show is going to be a good one. I just have that feeling. So that's going to do it this week for Golden Rule Radio. As always, we appreciate you joining us. If you liked what you heard, hit the subscribe button, ring the bell, head on over to our website at McIlvaney.com. You can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Better yet, why not give one of us a buzz here at McIlvaney Precious Metals? We can be reached at 1-800-525-9556. Thanks for listening and have a great week.